Hi everyone, this is Homes and Loans with Angela and Colleen. We are here with a new episode and we are tackling a couple different issues today. Can't wait to share with you. Currently, we are dealing with the government shutdown that just happened last night. So we're going to touch on that before going into renovation loans and the impact of that and how it's so great in different situations in the current market. So I'm going to head straight over to Colleen here.
Hi, I'm Colleen Mitchell with CMG Home Loans.
So here we are, and the government shutdown happened last night.
Yes.
Buyers and sellers alike are probably wondering, how does this affect their loan? Is it just specific to certain loans? And, what's the impact?
Yeah, currently the only loan program that's going to impact would be USDA since it is a government-backed program. But as far as conventional FHA and VA, we are business as usual, so we should not see any impact. I think the biggest impact that we're going to see is those homes that are in a flood zone, because you're not going to be able to get a flood policy while the government is shut down.
Okay, so just so people understand, every home that closes needs insurance unless they're a cash buyer. So anyone getting a loan has to have insurance.
If it's in a flood zone, you are mandated to have flood insurance, and if you can't get a flood policy, then that could impact your closing until this whole thing is cleared up.
Okay. Now, as far as other government agencies like the IRS and, say those requirements, how is that affecting the loan, or would it if this went on for an extended period of time?
So with the government being shut down, it will impact us the ability to get IRS transcripts, which are required for those that file tax returns, which could be required on the loan program that they're going through, especially if you're self-employed. So with the IRS transcripts, we are going to do a workaround and probably have to get the transcripts after closing. But for now, we're going to be business as usual.
So are there certain loans where, so say someone was self-employed and you needed to verify their tax returns, which you wouldn't be able to do during a government shutdown. Are you then able to transition that to a different loan where you aren't requiring tax returns?
We could, but I don't feel like that's going to impact us the ability to close on those loans.
Okay, it wouldn't impact them anyway. So we should be good because you're going to get it after the fact.
Correct.
They're not going to let it hold up closing.
That is correct.
Which is great. So even if it isn't USDA, though, you're a conventional buyer buying a waterfront property, for example, your biggest holdup would be the flood insurance that would cause the delay.
Correct. If the house is in a flood zone and the loan program mandates that they have a flood policy, you will not be able to get flood insurance.
But the same thing happens when there's a hurricane or
that is
tropical
correct.
storm. So regardless if there's a government shutdown, you could still have your closing delayed just because of a local storm like we're having right now.
That's correct.
Okay.
Yeah.
Good information for people to know. So just wanted to sum that up for you guys. Things shouldn't really be, that
let's
different.
hope it doesn't last long.
Yeah, and if it does, the two major delays are usually USDA, which is more, where do you see those? More rural areas?
More rural areas, but they're just not as popular these days.
We're just not seeing that many USDA loans. And in case you don't know what a USDA loan is, I'll let Colleen kind of go into that a little bit.
Yeah, a USDA loan is a government-backed loan in those rural areas. So the property has to qualify for a USDA loan. So there's basically mapping that shows the properties that would qualify, and USDA is basically 100% financing.
And I think that's what people need to know. So if you usually go with a USDA loan, they give you 100% of the loan, so you don't have to worry so much about the down payment. So people who are on a set budget, sometimes they like that because they can get a bigger, nicer property and get 100% financing.
Correct.
But they're going to be out in the sticks a little bit.
Yeah, I can't remember the last time I've closed one of those.
Yeah,
it's been a while.
It's pretty rare.
Right. Well, it's affordability.
Yes, 100%.
Because the USDA has lower debt-to-income ratios than most of the other programs, so we just don't see them these days.
But do they also have a lower credit score requirement, or no?
No, it's the same for any of the government programs.
Okay, good to know. Okay, so we are all set when it comes to government shutdown, no insurance, USDA. Like we said, in today's current market, I'm not seeing those either.
No.
I generally don't ever get a buyer looking in a USDA
No, very,
area.
very rare. So don't panic.
I think
this
most common currently is FHA or conventional. Those are the two ones
correct.
I see the most.
FHA, conventional, and in the VA.
And the VA, of course. We are seeing more VA, I guess. But
we are.
That's a government, VA. I'm surprised, and you said that's not affected at all.
That is not being affected right now.
Which is great news.
Right.
We don't want our veterans affected in any negative way.
We don't.
So, okay, so now we're going to move on a little bit. We were talking about renovation loans, and I think a
Yes.
lot of people aren't familiar with them. So, from my point of view, for buyers and sellers, I would just like to say that in this market, buyers don't generally want to get into a home where they have to do a bunch of repairs
Correct.
because their interest rate's a little bit higher and they don't want to have to deal with then sinking more money into it or coming out of pocket.
Right.
But if they are open to making repairs, then I always recommend the renovation loan, and I'll let you go into that into 1 second. But I will say, I think it's a product that a lot of people aren't aware of. Like they don't understand it and the differences with contractors and budgets. So I'll let
Correct.
you kind of explain that to people.
Right. So we actually do renovation loans for conventional FHA and VA. We just started doing VA about 6 months ago. So if you find a property that needs, whether it's just a cosmetic or major renovation, let's say it needs a new roof, new electrical, plumbing, you can actually roll that into your loan. So we take the purchase price plus all the repairs and we add it into your loan. Now, there's differences between whether you're doing like conventional, if you're adding all of those improvements, the house does have to appraise for the purchase price plus all of those renovations. But we do an appraisal based on the proposed value. So,
after all the repairs are
after all
done.
the improvements are done. So with VA and conventional, it does have to appraise for purchase price plus all your renovations. With FHA, we can actually use 110% of appraised value. So we've kind of used that sometimes even when
With the property as is? Like before, so they're taking the current value and then doing 110%, and they're giving.
we're
that-
taking
okay.
a subject to value.
Okay.
And let's just say that subject to value isn't enough to cover that loan. With FHA, we can use 110% of that value. So if there's some cosmetic things that maybe doesn't add a whole lot of value to your appraisal, we still have that 10% buffer.
So on renovation loans, I think a couple important things for people to understand is that not everything is allowed in a renovation loan.
Correct.
Right? So what are some things that you cannot do? Like put in a pool? What are some things they should know?
With conventional, you can add a pool.
Oh.
With FHA and VA, you cannot add recreational type
Anything
improvements
like that.
to your property.
So you couldn't add like a paver, back patio, or a summer kitchen, or
I think with the summer kitchen, you're okay, but with a pool, you definitely cannot add that in an FHA and a VA. So I've had buyers that happy with their house, but they just want to add a pool, so we can do a refinance and add that pool into their loan. But again, it has to appraise, with that improvement.
But in general, people are using the renovation loan to do real renovation repairs, like a new kitchen, a roof, flooring.
Roofs especially have been real
Yeah.
popular in adding into your loan because the insurance. Because if you don't have a newer roof, you can't get insurance. So we've seen a lot of clients add the roof into their loan.
That makes sense.
Yeah.
So what are the brackets for, I know there are a couple different renovation loans, right? Isn't there a B, a K, the alphabet
So,
here?
yeah,
And are those budget based, like one's up to 35,000, or what are the differences?
Yeah, so with FHA, there's something called a limited, which is repairs that are 35,000 or below. Anything over that, you can still do, but then that's considered a full 203K. And the difference between the two is that if you do a full 203K, you have to have a general contractor. If you're doing a limited, you can use up to 3 companies to do your renovations, and you don't need a general contractor for that.
3. Okay. So just a couple key takeaways for people is, again, if you're doing the limited, meaning you're going to spend less than 35,000 on your renovations, you can use up to 3 contractors. You
Correct.
don't need a general contractor.
Correct,
Okay.
unless you go over that 35,000.
And you can use people like, and trust that, they're even related to you as long as they are licensed
They
and
have
insured.
to be licensed
Isn't
and
that correct?
insured. That's the biggest thing.
So if your cousin does flooring and he wants to do that for you, he absolutely can. But you're going to have to, they have to be licensed and insured. So explain a little bit more about that program where they have so much time to complete the work. They have so much time to get the bids. And we'll kind of go through that. And then they also have, they get paid a portion then checks along the way.
Yeah, depending on the program, they are set up on a draw schedule. So they have 6 months to complete the renovations. With the limited, there's only 2 draws. So if you're doing the limited, which is 35,000 or below, there's only an upfront draw and then a draw at the end when everything's completed.
Okay. So they're going to, and they have to submit all those quotes to you so you know how much you need for the upfront. You're giving them 50%. Is that the understanding?
Correct.
Okay.
So we do have a typical draw schedule for, let's say, conventional, and we will work with the contractor if that draw schedule does not work for them because of materials. So sometimes they have to order quite a bit in materials, so they need that money to be able to order the materials. So we will work with the contractor on that.
Now, a homeowner can also order things on their own, correct? They don't have to go through the contractor and pay an additional fee. Like if they want to go to a discount place to get flooring, or no?
No,
Okay,
not if it's being included in the loan. They can certainly
have to
do some
provide-
things on their own, but that would not be included in the loan.
Okay, so it has to go through the contractor. You have to show receipts,
Correct.
all that good stuff.
Correct. Like I just had one that's actually closing on Friday, and this one is a conventional, and he did not want to include the roof. Well, we got the appraisal back, and there's tarp all over the roof. So we had to go back and say, okay, the roof needs to be added, and he said, well, I already gave my roofer 50% up front. So we were able to work with him and add the other 50% into the loan.
That's
But
good.
things like that really need to be disclosed up front so we can structure the loan properly.
That makes sense. And then don't they only have a limited amount of time to get the repairs done?
6 months.
6 months, okay. Was it previously 3 months? For some reason, I thought it was before in the past.
It's 6 months.
Okay, well, that's good.
6
Not
months,
that
and
you
you
want to
can
live
actually
through renovations, but, you do have this time to get it done.
right, and you can actually roll in your mortgage payments on the FHA. So if
Oh.
you need to add your mortgage payments into your loan while they're doing construction, since most times the home cannot be livable,
It
so
can't be
you
occupied.
can so
So
you
that's
can add
great
some-
news. So
yeah.
if you are purchasing and you're staying with family and then you're having these renovations done but you're not living there,
Correct.
You're not making the payment every month while you're not living there because you've already rolled it in, so it's being covered.
That's correct.
that's
Most of
great.
my clients don't typically do that, but it is
Yeah.
an option that we can add into the loan.
Yeah. Are you seeing that? So are there different payments, like down payment requirements for
Good
these different
question.
programs?
So with conventional, it's typically 10%, but we do get exceptions to do 5%. And then with FHA, it's 3.5%, and VA is 100%.
Okay.
So
great.
really, the only one that would have a restriction is conventional.
Okay. Okay, so I know we were covering so many different things with these renovation loans and kind of throwing a lot at people.
Right.
But obviously, if they are interested in something like that, whether that be FHA, VA, or conventional, all great options.
Right.
So they can reach out to you directly.
Yes.
And your contact number is?
407-620-3563. I'm happy to help.
Okay, great. Well, like I said, I love renovation loans because they're just an easy product. And if you guys have more questions, feel free to reach out to us, and we will see you next time.
Thank you. Have a great day.